You're watching Economy Buzz, one talk show that brings you all business matters and policy, the economic issues, and analyze the Indonesian market to help you to make the right step for your capital investment. For you, international business people in Singapore and Indonesia. I'm Edwin Suryanata. Let's talk about your business on eBus. The economic crisis that hit Europe is a factor that could not deny its influence on the economy of Indonesia. The impact of the crisis that was beginning to fill the trade sector. The shadow of this global crisis cannot be underestimated. This crisis began to be felt in some of the export products as well. Here is the report for you. While the European Union suffered a severe debt crisis, 2011 was a glorious year for Indonesia's economy. The country was the only emerging stock market to have achieved real gains in 2011. And for the first time since the 1997 financial crisis, Indonesia has recovered its coveted investment grade. Despite the financial success Indonesia have achieved in the past year, however, there is no reason to disregard the European debt crisis' future impact on Indonesia. The top three aspects of the Indonesian economy that will be most affected by the European debt crisis are probably rates of trade, capital flows, and remittances. What exactly should Indonesia do in order to prevent the European debt crisis from stagnating the exports and investments? The answer might lie through the implementation of aggressively promote foreign, private, and government investments through multiple measures to increase capital flows, liberalize trade through increasing exports and multilateral trade cooperation, and boost economic growth through lowering interest rates. Due to recent economic downturns, including the Euro debt crisis, it is expected that the rate of foreign direct investment, or FDI, by private firms will continue to grow at a significantly low rate globally. Indonesia, however, can prevent the significant reduction of FDI inflow through providing financial incentives such as altering its taxation measures. As part of the world's economy, Indonesia can solve the global financial crisis through trade liberalization by working along with other governments, private firms, and international organizations. MNC Business Report for eBus. And to have a deeper view about Eurozone financial crisis and its impact toward Indonesian economy, we have Mr. Vicky Amarnani from Monex Investing the Futures. Mr. Vicky, it's very nice to have you back in our studio.
Pleasure to be here.
So talking about minimizing the potential impact of the Eurozone, some of the people are still much worried about this. Probably we can start by sharing your view about how do you see the current progress in Euro debt crisis.
Okay, in terms of the Euro debt crisis, we have just dealt with Greece so far, and Greece is only 2% of the European Union. So if people say that is the debt crisis over, this is just a trailer. The movie is yet about to begin, basically. So the only concern is that how the European leaders manage it. Merkel from Germany, France, how these countries manage it. Because if everything is done in an orderly manner, with good support from governments, enough liquidity for banks to deal through this crisis, then things can be sorted out in a much better manner as well.
What kind of support are we talking about here when we are talking about really minimizing the impact, especially what's been happening in Greece, even though it's just like play about 2% only, the percentage?
Yeah, correct. But I guess even though maybe Greece is only 2%, it's the exposure other European banks have to Greece, such as UK, France, Germany. So if Greece collapses, then all these other banks get affected. So there is an indirect effect as well, which is very huge.
Is it right that some people are becoming skeptical about this kind of union, like European Union is proven it is felt in accommodating the needs of the member of the countries of?
Yeah, I guess the difficult thing is because Euro is a one currency which is shared by 17 nations, the Euro members. So it's very difficult for them to come into an agreement because it's 7 countries with different economies, all trying to share different strengths. Some have weaknesses, some have strength, all sharing one currency. So it's always very difficult compared to the US, where it's only one currency, right, one country being managed. That is probably the biggest hurdle they have. That's why if you see among the European leaders such as France and Germany, they always tend to have conflicts as well. But finally, they do come into an agreement to support the markets. Yeah.
Far before they implement this kind of single currency concept, have they considered that the consequences might appear or happen?
You mean of countries leaving the Eurozone? Yes, of course. Yeah. That's why in between there were talks about Greece leaving the Eurozone, which created some panic in the market and brought correction into the equity markets. But I don't think, at least for the time being, over the next 2 to 3 months, we wouldn't see a big panic like we saw last year in September, October, when they said Greece would be default and they wouldn't receive the bailout funds. So I would see over the next 2 to 3 months, Europe is fairly stable. But of course, if we see last week, there's been contraction in European manufacturing from France, Germany, which is negative. There's been contraction from China as well, China manufacturing as well. So China and Europe are two big economies, which definitely can impact upon the rest of the world as well. So that's been a bit of a negative. But in terms of the equity market, it was a small correction. And then last night, Bernanke spoke about further easing provided, and the markets are back up again. So maybe this is more for investors into equity markets. If you're worried that there's going to be a big correction, I don't think so. It's just a shallow correction, and it's an opportunity for long-term investors who have cash piled up to reinvest into the equity market. That's why the equity markets have shot up again. So we're going to see corrections, maybe to see newer highs in the equity markets.
In a short time, what correction do you expect will happen?
In which market?
Yeah.
In
what correction do you think?
Well, if you see, for example, the Dow Jones now at the level of 13,200, I think there is a very strong support. This is more of a longer picture, but there's a strong support at 12,700. And like I said, every time, if there is a deeper correction, I mean, if there is a correction below 13,000 in the 12,750, 12,850 range, that will bring more buying power, in fact, to boost the market to set new highs again.
What factor currently could affect the correction? If you talk about the short term,
maybe now after Greece has been sorted out, the next focus is on Spain and Portugal.
Spain and Portugal.
Yeah, Spain's fiscal deficit has already approached 6%. They're saying that Portugal may need another 100 billion euros to support their debt crisis as well. So these kind of problems will basically, lead to a little bit of panic or maybe some profit taking as well and a bit of correction in the market.
Share with us about the debt crisis case in Spain and Portugal. What make them different with other country in a Eurozone member?
Well, I guess the main problem is, like in Spain, for example, the unemployment rate in Spain is as high as 28%. Indonesia at 6% only, and Spain is 28%. And the unemployment among the youth population is as high as 48%. So that means
almost half of the population.
Almost half the population of the young population, yeah. So every person who graduates from the university, he has a 50% chance of not getting a job. Isn't that horrible?
Yeah.
So, unemployment rate, and then on top, these countries such as Spain and Portugal, they will be given funds to support their economy, but then they're also given austerity measures. Look, you have to cut spending, you have to control your debt. So these guys are stuck. These guys cannot spend money, right? They have to cut growth. So how will they survive? You have a big debt to pay, right? So low interest rate, big debt to pay. You need government spending. So it's very difficult. So I think just by putting austerity measures and controlling them to not spend money is not the solution. If everybody just puts their money under the blanket or under the pillows, that's not good for the economy, right?
It will be a good idea as well. Mr. Vicky, we are going to continue to this one.
Sure.
Make sure you ask me with us on Economic Bus. We are discussing about Eurozone financial crisis and its impact toward Indonesian economy.